What is going on, y'all? This is Pay Me in Dividends. Welcome back to the channel. In this video, I'm going to give you guys a breakdown of WPAY from Roundhill versus YMAX from YieldMax. These are two high-yielding ETFs that use different strategies in order to generate income for dividend investors. First, we'll take a look at each ETF's holdings and strategy, and then we'll do a side-by-side comparison of the performance of these investments. Alright, so let's get right into it. First, we'll take a look at WPAY. So WPAY is Roundhill's weekly universe ETF. It bundles Roundhill's single stock WeeklyPay ETFs into one ticker and targets a diversified weekly income with a monthly equal weighted balance and a 1.2 weekly total return exposure to their single stocks using derivatives, which includes swap agreements. Alright, the swap agreements fund the distributions, and return of capital can be part of the payout mix, which can be beneficial during tax time. Now, a couple things to note about WPAY. One is that the 1.2 times leverage works in both directions, meaning if the underlying assets move up by a particular percentage, WPAY will outperform. However, if the underlying assets move down in price, then WPAY will amplify those paper losses. Just something to keep in mind. And two is the fact that the weekly distributions on this ETF will fluctuate from week to week, depending on how much money they've made through swap agreements during that particular time period. Alright, now moving on to YMAX. YMAX is the ETF from YieldMax and consists of the single stock ETFs as the underlying assets. At the time of this recording, it has 33 holdings compared to WPAY, which currently has 15 holdings. Alright. The weekly distributions will fluctuate depending on the option premium, but it will be a bit more predictable than WPAY's weekly distributions. And this leads me to my next point, which is the difference in how these ETFs actually make money. As we've already covered, WPAY uses swap agreements along with 1.2 leverage in order to create income for the investor. On the other hand, YMAX uses synthetic options, meaning they don't hold the underlying shares, but instead use a variation of synthetic options in order to extract premium from the options market to distribute as a dividend. By nature, this will cap the upside potential of the ETF when the underlying assets go up in value. So basically, you're trading asset appreciation for current income. Alright, and finally, I want to show you guys a performance comparison of these two ETFs since the inception of WPAY. Since WPAY is the newer ETF between the two, and I'll let you be the judge. Alright, so I'm over here on dividendchannel.com. It's a great free tool to compare different investments, and so we have WPAY versus YMAX, and we're gonna pull up this chart. And so this is an assumption or a hypothetical of investing $10,000 into each of these ETFs, but you can use any dollar amount. This is more so just a visual, and you can see that since the inception of WPAY, September 4th 2025, it has gained 81% annualized, right? Total return is 9%, and YMAX's total return is 5%. Now, this is with dividends reinvested, and without dividends reinvested, WPAY has still returned 9.5%, and YMAX has returned 5.6%. So, in both of these hypotheticals, WPAY has outperformed YMAX, and this is one of the reasons why I personally chose to invest into WPAY, is because they're not capping the upside potential. They're also using that leverage, which again works in both directions, but I'm fine with the volatility as long as they continue to pay that distribution on a weekly basis, and I have the potential to increase the share prices appreciation. All right, so you guys let me know in the comments, which one do you like better, WPAY or YMAX? YMAX does have a longer history. WPAY is new, and we need to see if it will recover after a big correction, but I am optimistic for it. So you guys let me know in the comments, which one do you like out of these two. As always, I appreciate you stopping by the channel, and I will catch you in the next video.